Hello, I'm Nick Rossington, Director of Financial Services at the Buy-to-Let Mortgage People. Today I'd just like to give a roundup of the activity that we've been seeing during May, and I think one of the, in all the press, what we are seeing is a lot of lenders are still tightening up on their criteria for interest only. A lot of lenders now will only lend up to 50% loan to value, and we've recently seen the co-op who have said that they won't lend interest only full stop. So this criteria, it is seen as being more of a risky lend because repayment vehicles have either not been in place or not been maintained, and as lenders are taking a lot more responsibility for their lending, they want to make sure that a mortgage is repaid, a residential mortgage is repaid at the end of the term. So they are being a lot stricter, and what we are finding is that a lot of clients are coming to us who have probably been turned down for a remortgage with their current lender and asking us to search the market for the best deals for them. So that's what we do as brokers. And it's creating a lot of opportunity for us in that particular market. We're also finding that a lot of people say, well, if the residential market is tightening up on interest only criteria, is that going to have an effect on the buy-to-let market? Well, no, it isn't. They're seen very much as two different transactions. The residential market is for people who have properties to live in. The buy-to-let market is for investments. And the only way that the investment market can work is with interest-only loans, where the rental income covers the mortgage payments and there's a margin in between which makes it work. Also the interest payments can be offset against tax. It's very much seen as a business proposition. So I don't think there's any indications that lenders will be looking for capital repayment for buy-to-let properties either in the near future or long-term future, as far as I can see. Another thing, an interesting fact that came out this month is that there's now something like 500,000 more 20 to 34-year-olds who are living at home, 20 to 34-year-old adults who are living at home. So there's 3 million adults between those age ranges living at home, which is a 20% increase from 1997. Now, these are people who are finding it very, very difficult to get onto the property market as first-time buyers, and hence their next move has got to be into the rental sector. So I think what that means is that there is a great demand for rental properties out there. We're finding it probably quite difficult to find the necessary amount of rental properties out there for people to live in. Rental demand is so high. Average rental income is well over £700 a month now. There is a great opportunity, and we're seeing a lot of small, cheaper properties that are used for buy-to-let purposes because clearly they can be shared with 3 or 4 people. It means that the cost per individual is that much less, and this is probably the market where we're going to find a lot of people who are living at home can take that first step into moving away from home into the rental sector before they actually rent their own property outright, and then hopefully save up enough money to purchase a property of their own. Now that is a long way down the line for a lot of clients. So it's a great opportunity for buy-to-let. The sector is still very, very strong and will continue to be strong as long as there is such high demand for properties out there. Thank you very much. I'm Nick Rossington, Director of Financial Services for the Buy-to-Let Mortgage People. Please call me on 01522 503 710, and I look forward to giving you an update at the end of next month. Thank you.